So one of the things that we talk quite a bit about is specially designed insurance contract, SDIC, privatized banking, bank on yourself.
Yep.
There's a lot of different terms out there. But we often refer to it as your emergency and opportunity fund. Now, when we say emergency, we say that, we run into a lot of people that maybe had an unexpected expense, right? Well, they end up going to a credit card and the interest rates are 16, 17, 27%, whatever crazy number it is. Well, instead of paying an outrageous interest rate, we want them to take the money they've built up from their privatized bank and pay it back. Or we say an opportunity fund.
Exactly.
Because we work with so many different people that will say things like, man, I really want to get into real estate, but I don't have the cash. Or the stock market has a huge correction and they don't have the money to get in and buy. How many people wish they would have gotten in on Facebook, Amazon, all of those when they were low and they can't?
And where are most of their assets when we see that? Most of it is tied up in IRAs, 401ks. And to be clear, that's not bad. There's no bad way to save, right?
Again, emergency and or opportunity fund, just like a privatized bank is not the all or nothing.
Exactly.
It's another asset class.
Exactly. So if all of your money is tied up in these retirement accounts and these opportunities / emergencies do happen or do come along, typically you can't get money out of an IRA, out of a 401k without large penalties or a very restrictive loan from a 401k.
Correct. And this is something that you have actual experience with.
Exactly. So this is going to be more on the emergency side.
Correct.
So about 9 years ago, my 4-year-old son was in a car crash.
Why was your 4-year-old driving?
He wasn't driving, so he was in the back seat. Make the story quick. Back seat, got rear-ended. Had a major brain injury, was in a coma for 15 days, had to learn how to walk, talk. I mean, it was obviously pretty serious, okay? So.
And you missed quite a bit of work.
Exactly. So 9 years ago, I was kind of in the middle. So I've been in this business for 15 years, right? So it's kind of in the middle of my business. Things were going well, but as you can imagine, when your son almost dies, he's in a coma, I'm not gonna work. As you just said, I'm not gonna work, right? My wife isn't gonna work, okay? So during that time, I had great business partners at the time, okay, that helped, but I needed income, right? So we had the choices of going to our family and asking, hey, can we borrow some money, which is not fun, obviously, or go to my own SDIC, which I set up when I was 21 years old, almost 20 years ago. No, it doesn't look like it. I am 40, all right, a long time ago. So I've built up a decent amount of cash in there that I could use while I was out. They had told us he was going to be out. He was going to be in a neuro rehab center for 6 months. That was the original plan, which, as you can imagine, most people cannot take off for 6 months, right?
And imagine how stressful that time is already, and then add the financial strain on top of it. And if you can take out that what if of the financial, that's huge. And you can put all your focus and energy on the healing of your child.
And how many stories do you hear from folks? Accidents happen, they get sick. Whatever the case may be.
Life happens.
That's right. And beyond like health insurance and without having disability insurance, that doesn't apply here. But I didn't have any income really coming in. I had a little bit coming in, but not much. So seeing this picture of us potentially being out for 6 months, it was stressful, and let alone wondering if our son was gonna live, right? So we go to our own SDIC, borrowed money out, and that helped us stay afloat for a few months while I was out. Luckily, he wasn't out 6 months. He recovered quickly. He's fine now. A little annoying.
He's super healthy.
Annoying teenager, but besides that, he's fine. But again, for us, having that SDIC built up, being able to use those funds, one, we didn't lose our house. I mean, nothing crazy happened like that.
Right.
My business was able to stay afloat with SDIC and my awesome partners. But again, very, very terrible situation. Could have been much worse had I not had this asset built up that I could access during that time.
And that's the key. What could have been a knockout blow wasn't, because you had the proper planning in place. And I think we want to be really clear. Mutual funds, the stock market, 401ks, IRAs, SEPs, all of those things are not bad. But when you look at privatized banking as a foundation, it's a great place to start. And life insurance as an asset class is huge and should be a part of your plan.